Mortgage rates continue to absolutely plummet, creating what might be a nice little buying opportunity here in the next few weeks. I'm going to show you the numbers behind that claim as well as our local metrics here in Los Angeles, because this is the Los Angeles Real Estate Roundup for August 5th, 2024. My name's Jon Schwartz. I'm a realtor and investor here in Los Angeles. Let's get right to the numbers. Right here, we're looking at Mortgage News Daily's average rate on the 30-year fixed rate mortgage going back over the last 12 months. And as you can see, in the last month, mortgage rates have really fallen. Just a month ago, on July 2nd, the average mortgage rate nationally was 7.13%. Now, on August 2nd, we're looking at a national average mortgage rate of 6.4%. And remember, if you have a good credit score, you're going to be seeing a rate that's maybe 30 basis points lower than this. Borrowers with good credit are going to be seeing rates in the fives very soon. Why have mortgage rates fallen? Well, mortgage rates tumbled to their lowest level since April 2023 after a weak jobs report. A weak jobs report is good news for inflation. Good news for inflation means the 10-year Treasury yield drops. And when the 10-year Treasury yield drops, mortgage rates drop. Lower rates pull in new buyers. New buyers push prices up. So the question is, when and how many new buyers are going to come to market? When are they going to push prices up? How quickly do we have to act on these lower rates? And we can get answers by looking at recent history. So this graph is the purchase index versus the 30-year fixed rate. Now the orange line, this guy here, this is the 30-year mortgage rate over the past, well, since January 2023. And this blue line is called the purchase index. It's an index of how many people are applying for loans to purchase property. And as you can see, when rates are low, the purchase index is high. When rates are high, the purchase index is low. What I want to look at is this decrease in rates from November 2023 to January 2024. The rate drop started October 30th and ended December 25th. And the purchase application index peaked on January 22nd. What this tells me is that we have a 1 to 2 month lag between the beginning of rate drops and the peaking of purchase applications. Now, if we move up to the present, this graph actually only goes to July 29th. Right here on August 5th, we're already down here at 6.4%. This series of rate cuts started May 6th. Let's say beginning of May, right up here. I don't think we're going to see purchase applications peak for another 1 to 2 months from now. That provides us with a cool opportunity in August and September to buy property while rates are low, but before a ton of buyers have flooded the market. Now, is it worth buying in August or September and not waiting until the really slow days of October, November, December? Let's take a look at local market indicators to see what they tell us. Right now, we're looking at the Redfin weekly market data for the Los Angeles metro area. We start with median sale price, where we often start. This week, we saw what I would call a sideways slide. Last week, the median price of a home in Los Angeles was $929,000, 7% above last year. This week, we're at $927,000 and still 7% above last year. The median price of a new listing, this is the median price at which homes are listed on the market, also saw a sideways slide this week. Last week, we were at $940,250. This week, we're at $937,750. So in terms of the prices that home buyers are actually paying, as well as the prices that home shoppers are actually seeing, we stayed about flat from last week. But here's something interesting. Weeks of supply grew this week to 15.1 weeks of supply on the market, up from 14.5 weeks of supply last week. However, take a look at what the individual metrics show us. New listings fell for the second straight week in a row. 2 weeks ago, we were at 1,469 new listings on the market, a year-over-year growth of 16.1%. Last week was a decline. This week was another decline, such that this week we're at 1,417 new listings on the market this week, only 10.7% growth over last year. To keep inventory high, to keep prices soft and not growing, we need to see inventory growing relative to last year. And where do we see inventory growth? In the new listings data. So this trend is not good if you're hoping that prices will fall off this fall. Compounding that, homes sold has been outpacing last year for 3 weeks straight. If this continues, if the new listings coming to market shrinks relative to last year, and the homes sold outpaces last year, then active inventory is going to decline, and that's what puts upward pressure on pricing. Now, pending sales is an important metric because it tells us where homes sold is headed. A home goes pending about a month before it becomes a home sold. This week, pending homes was at 1,192. That's 4.1% over last year. The previous week, we were 1.9% over last year. So we should actually, in the next month, see more homes sold relative to last year than we've been seeing. Again, that is upward pressure on pricing. Put this all together and again, relative to last year, we see active listings being squeezed. Active listings this week was 14,950. That's 20.84% growth over last year. If we come down to the year-over-year chart, we can see very clearly that active listings relative to last year peaked about a month ago and is now falling downward. This is going to be putting upward pressure on pricing, and returning to the absolute numbers chart, we see that last year, inventory grew all the way until November. What's much more typical is that inventory peaks here in late August. So it's going to be difficult for us to see positive growth in inventory relative to last year for the rest of the year when it's possible that our active inventory has already peaked there in late June. So the market metrics indicate that pricing will remain elevated, though fortunately, we have lower rates right now to make those payments more affordable. Perhaps these next 2 months are an ideal time to buy while rates are low, but not so low for so long that new buyers have been attracted into the market. We'll be keeping track of mortgage rates and mortgage applications, so hit the subscribe button and hit the bell icon so you get notified when next week's Los Angeles Real Estate Roundup goes live.